Hey guys, I hope you all had a Merry Christmas, Happy Holidays. If you're still celebrating, I hope it continues to be a good time. But unfortunately, I hate to break the bad news to you guys. I really hate to break your fantasy here. Santa is not real, Bitcoin is real, and Bitcoin is forming the first ever yearly bearish engulfing candle it's ever seen in its entire price history. We're going to be getting into that and why it's not probably as bad as people think it is as well. There's some arguments to be made there, but we need to get into that. And we also need to look into something that I've been meaning to discuss for a long period of time. I have discussed it in the past, but I need to bring it up again. And that is the fact that if Bitcoin goes below this certain level that I'll bring up in the video, which is 11K, if Bitcoin goes below that price point, it may do irreparable damage to the entire macro structure of Bitcoin and hence the cryptocurrency market. Keyword may. But it is very important to look at. So let's get into these topics. Before we get into anything though, check out the pinned comment, check out the description. We have 5 days left on the VIP sale. 30% sale on all VIP memberships until the new year. We have the Crypto Academy courses. If you want to learn how to trade, you can do that in a university format. And we also have the free Telegram community discussion group. All of that's in the pinned comment and description. All right, guys, let's get into the video. I want to start out by saying 4-year cycle theory is very much in play here. We've seen the low in November, and that was as predicted. Now, the 4-year cycle, that's the current low. It's not confirmed yet, obviously. The 4-year cycle is essentially a date range trend on Bitcoin. That predicts a Q4 bottom. It could spill into January. We're entering January now in a few days. And so we're entering kind of the last possible time in which Bitcoin can bottom out according to the 4-year cycle. If we bottom out later than January, if we go down, we're going down later than January, which would be driven by the macro, of course, and the recession, if that were to take place. That would be very bad because that would mean the 4-year cycle theory, it wouldn't get invalidated per se, but the date range trends would be stretched way too far for it to be a concise tool of measurements and tool of predictive measure for the future, which would not be good because when you lose macro predictability, which is what the 4-year cycle offers, macro predictability, you lose a lot of confidence in long-term investments in Bitcoin. Hence, you lose a lot of innovation in the cryptocurrency space in general because there's not as much interest and hence there's not as much incentive for businesses to innovate in the space. So we really don't want to see this be lost. I do want to just quickly mention that off the bat. We're entering the last leg here. And I suppose people say, oh, Wolf, what do you think about the recession pulling it down? What do you think about the recession invalidating the 4-year cycle? My opinion doesn't matter. The fact of the matter is we need to wait for the data to play out. Invalidation or validation. Validation would come from a break above the bull market support band and the critical levels, which let me bring up quickly here. So this macro, it's not macro actually, this medium term kind of downtrending line, as well as the bull market support band as well, and as well as the 200-day SMA breaking above all of those things would lead to a validation of the bottom and would lead to a renewed upwards trend on Bitcoin and an end to the kind of fatal part of the bear market. We need to be seeing that happen. If that does not happen, and we enter February, March, we're still dropping down exponentially, that would not be good. So yeah, that's kind of the first thing I just wanted to bring up there. We're in the last leg here, final stretch, doesn't matter what my opinion is really. The fact of the matter is we need to be waiting for data to take place because that's when we see reactions. All right, so now that we've covered that, we can get into the main topics of this video. We'll start out with the yearly candle. So this is the yearly chart for Bitcoin. Every 12, so one of these candles represents 12 months. So this is a very, very, very diluted view of the Bitcoin chart, and it's honestly not a favorable way to look at the chart at all because there's so much that happens within a year. To narrow it down to one candle is a bit ridiculous. I don't think many people are actually basing buying or selling based on the yearly chart. I think that's a bit of a ridiculous thing to do. If you're basing your buy and sells purely on the yearly chart, I highly encourage you to zoom in because that's again, it's a ridiculously diluted view of the price action. But ultimately, the main point that people have been making here is that we're seeing a bearish engulfing yearly candle for the first time ever. As you can see, over the price history of Bitcoin, we've seen exponential growth. We've seen no bearish engulfing candles at all, of course, and this is the first time. Now, a bearish engulfing candle represents a massive amount of selling pressure. Selling pressure that pushes the price down below the previous yearly open, which is generally indicative of a fresh downwards trend and generally indicative of a trend continuing downwards. So if the if the candlestick pattern had anything to say about it here on the yearly chart, we would actually continue going down for at least a few more candles, which means for at least a few more years, we'd continue downwards on Bitcoin. And that's at least, right? But the main point is this, right? The candlestick patterns on the yearly chart I don't think are particularly relevant, especially considering the fact we need to take into account diminishing returns. A great example of this, in my opinion, is the fact that we've seen a bearish pattern on the yearly candles before. Okay, if we actually go back in time here, and we draw a line here from 2017, 2018, 2019, what we saw is we came up in 2017, we formed this kind of high here at around 14K. In 2018, we opened the candle at that high, got rejected off of it very strongly, and then in the next year in 2019, we formed a wick, and we came up to that high and rejected off of it very strongly once more. We were unable to break to the upside, and the candle body closed very, very low below it, which is a rejection point. That's a clear rejection point. That's a bearish candle formation. If candlestick patterns had anything to say about it in this instance, we would have continued downwards. That's if candlestick patterns had anything to say about it. But we didn't, right? Because it turns out the 4-year cycle and macro strength from Bitcoin and everything else in the shorter term is stronger than a candlestick formation on the yearly chart. And we just breached straight above it with absolutely no hesitation whatsoever. In fact, we barely even spent time downwards testing the lows. We tested the lows once and we skyrocketed above it, right? And that test of the lows was during COVID, which is an unprecedented, black swan event. So the point I'm trying to make here is that I don't think candlestick formations are particularly relevant on the yearly chart. And even if they were, guess what? This bearish engulfing candle is not all that bad, because what it actually is doing right now is it's retesting the 14K level I just talked about as a rejection zone, which could be seen as a bullish resistance support flip. So guys, if you're looking too closely at the yearly candles here, my advice to you would be to zoom in. It's not entirely relevant. It's not as relevant as people think it is. Yes, it's not like a good thing, obviously. I mean, you can't argue that it's bullish. But it's to argue that it's like one of the reasons you should be selling Bitcoin and it's all over now. Crypto's going to die because the yearly candle is completely and utterly ridiculous, in my opinion. That is the first topic of the video. Now we can get into the next topic, which is arguably the more important topic, and that is this. If Bitcoin drops below 11K on a weekly candle close, it is not ideal for the macro structure. And it potentially, it's hard to say decisively with this kind of thing, it potentially could cause irreversible damage. Let's get into that. I want to briefly interrupt this video to talk about the BitGet Exchange. The BitGet Exchange has 5 times lower fees than Binance, which is the biggest major exchange in the cryptocurrency market on futures. It also has 0 fees on every single spot pair, so you can trade spot for entirely free, no fees included. It runs events. Right now it's got a FIFA World Cup event sponsored by Messi, the football player. It's got copy trading, strategy trading. It's got exclusive rewards and discounts in the reward center. It's got everything you need for a trader using exchange. This is the exchange I personally use as a trader for my everyday trading, and I highly recommend everyone does so at the Wolves of Crypto YouTube channel. Sign up using my referral link for exclusive rewards and discounts. That really helps out the channel, and I appreciate it. For my fans from the United States of America, you can sign up using this exchange with a VPN and use the exchange with a VPN and just sign up using my referral link like normal, and you'll be treated like a normal customer because this is also a non-KYC exchange. So make sure to sign up using my referral link in the pinned comment or the description below, and without further ado, let's get back into the video. So it really is quite simple to explain, but I understand a lot of people are shocked by the claim that I made just then, right? It's quite simple to explain though. Bitcoin sees diminishing returns. Here's the explanation. Bitcoin sees diminishing returns, okay? Diminishing returns in every asset is to the upside and to the downside. If you see an uneven balance of diminishing returns to the downside as you saw to the upside, for example, if Bitcoin sees diminishing returns to the upside, but it doesn't see it to the downside, that's bearish because it represents a weakness in macro structure, right? If Bitcoin went up exponentially in previous cycles, right, it should go down less and less every cycle. Diminishing returns is a thing that happens to the upside and to the downside. As the market cap gets bigger, the asset becomes needs a greater force of buying and selling to move. So it should be a thing that happens to the upside and to the downside. What we've seen in the history of Bitcoin is an 86% drop in Bitcoin's price valuation from the bull market top in 2013 to the bear market bottom in 2015. We saw an 84% drop in the next cycle, and currently we are sitting on a drop of around 77%. That would be healthy. That would be a clear diminishing returns pattern to the upside and downside. We saw diminishing returns to the upside. We should see a diminished drop to the downside in order for Bitcoin to make a healthy macro structure. Now, we have to look downwards further because obviously the bottom is not confirmed at this point. So where are the next levels of support that we could possibly bottom at, right? We could bottom at 13.8K, which is a weekly candle support. We could bottom at 11.5K, which again is a weekly candle support. You can see that these support zones here, especially 11.5K, are massively supported by a spike on the volume profile, meaning that once we reach these regions, specifically 11.5K, we have a large amount of support below us, which makes it very, very difficult for Bitcoin to drop below that level. So this is kind of adding into 2 points of the argument. The first point is this. If Bitcoin goes down to 11.5k, in my opinion, that is the lowest possible point Bitcoin can go while maintaining a healthy macro structure. 11.5k, I'll say it again, on the weekly candle close, is the lowest possible point Bitcoin can go while maintaining a healthy macro structure. Reason one, because if we go below 11.5k, we would have seen a larger drop than what we saw in 2018, which would kind of stuff up the macro structure, because again, we would be seeing non-diminished returns to the downside, which would be a weakened structure, right? And eventually over time, that would lead to Bitcoin flatlining and eventually dropping downwards in price valuation on a macro scale. So 11.5k, based on percentage diminishing returns, should be the lowest possible point that Bitcoin could go, even if it gets there, okay? The second reason why we don't want to be seeing Bitcoin go below 11.5k is what we just brought up, the volume profile. There is a large spike of volume on the volume profile, okay? If we drop back within that spike, if we drop below 11.5k, this will turn into resistance. This large spike will turn into resistance, and it will make it very, very difficult for Bitcoin to break back above into not even new all-time highs, but even into that like lower teens price region. It'll be very, very difficult to take a dramatic amount of buying pressure, and that buying pressure might not be there because we would have just invalidated the whole diminishing returns theory on Bitcoin and shown massive weakness in the macro structure. Not to mention the fact that if we were to go down below 11.5k, let's be honest, it would probably happen deep into 2023, and at that point we would have lost the 4-year cycle as well. Okay, so based on all those points there, we do not want to be seeing Bitcoin drop below 11.5k. I have made this very clear in previous videos. I spoke about it a lot last month. In my opinion, the lowest possible price Bitcoin can go to while maintaining a healthy macro structure is 11.5k. Does that mean we can't go below 11.5k? No, but it does mean that if we do go below it, Bitcoin might face serious consequences in the future and might have serious trouble breaking to new all-time highs in the future, especially considering the 4-year cycle theory would be broken at that point. That's the end of the video, guys. I hope you enjoyed. Thanks for watching, and I'll catch you in the next one. Cheers.